Anand Tandon joins in as well to talk about trade. Anand, morning. Stuck in a bit of a flux. The only thing is that the market seems to be drifting lower rather than consolidating. Does it look like December might turn out to be a weak month for us?
So far, definitely it has been weak, and obviously the fact that the dollar has begun to strengthen hasn't helped exactly. We've been maintaining for a while now that it's actually international macro flows which are more important than anything that we do in the Indian market. And I think that continues to be the dominant theme for the moment. There was expected to be a dollar bounce. It's happened. The question to ask now is how far that can go. I'm not sure that we have an answer. I'm not sure too many others have either. But at least we are not sure that we've seen the best for the dollar in the near term. So on the assumption that as Sudarshan mentioned, the market today will be at least strong, but I'm not sure that I have a view about how far it can. The dollar can continue to go up, and consequently the Nifty can continue to fall at least for the next few weeks or so.
What is it looking like right now, though, Anand? Is it looking like a temporary rebound of the dollar that's causing us to come off a little bit but basically remain in that range? Or do you think the tactics should change around a little bit going into Jan?
Well, I mean, if you're looking for the contrarian play, which is what I guess most people are today, the question to ask is whether there'll be a real recovery in the US economy. Now, there is some apprehension or some expectation that, the next year will actually augur well for the US economy as compared to the year that's just gone past. And consequently, there is a chance that there will be a flow back into the US markets and with the reverse effect in most emerging markets. I think that may actually play out for the first few weeks at least of the new year. That said, I think with the 18-19% actual unemployment level, I think you'll have to actually get some very serious level of economic activity going on back in the US for any kind of recovery to sustain. So I would expect that closer to maybe March or a few weeks from there, you would actually begin to see that apprehensions start building up again, that the recovery is neither strong nor is it likely to sustain. And therefore, you would actually start moving back into the other currencies as well as into non-dollar assets. Overall, therefore, I think the first half of the year is likely to be fairly confused. Initial weakness followed by a lot more strength. On the Indian economy side, I don't think things are looking too bright either. We have big-time food inflation, and I don't think that there are. It's almost consensus now that the RBI has to do something on the interest rates, both of which are not necessarily great news for the markets in the near term.
Anand, have the banks corrected enough in anticipation of some kind of rate move, or would you still be wary of that space?
Near term, I think they're done. Most of the downside seems to be already compensated for, at least as far as the interest rate hike, presumed hike goes. Longer term, I think, if you assume that the interest rate hike will not actually take away too much of the liquidity, and that, the credit growth remains somewhat bleak, at least for the near term, I don't see that there is too much downside from here on. The catch-22 we are in is that, if credit growth doesn't pick up, that can't be good for the economy. And so easy liquidity is not necessarily the best situation to be in. On the other hand, if it does pick up, then interest rates will start moving up again. And that again may not be great news. But at least for the near term, I think the selling off is more or less done.
What's the downside risk going into January, Anand? Because there is that rate concern, and then there is talk of some kind of action around the budget as well. Do you think we might stop at the 4,800 mark as we have in the past?
Difficult to say at this stage. It depends on how a whole lot of factors, especially in the global markets, pan out. All I can say at this currently is that the next few weeks, especially till the end of this month, are lots of holidays. So the best thing to do is to enjoy yourself. The next year is a new year, and it can take care of itself.
Anand, in a market like this that's showcasing so much of lethargy, we see range-bound movement, and then now we see that downward bias. What role do you think defensives will play from here on? Because we've seen last week as well, they've outperformed most of the other sectors. Do you think they have a lot of potential now to see upward movement, especially in the months where the volumes are less and the participation is lower?
Well, I assume by defensives you mean FMCG and pharma. To me, they are not defensive. They are actually stocks which grow at a steady pace. So So if the rest of the market grows faster, they don't perform as well, and if the rest of the market falls or grows slowly, then they obviously are the outperformers. From that point of view, both of them are reasonably priced. I don't see that the euphoria that we are witnessing in pharma, for example, is something that is necessarily sustainable for too long. I think what will happen is that next year we'll see a lot of M&A activity in the Indian pharma space, as many of the Western European and especially US firms look to try and consolidate their positions in their own markets, which is now under significant threats because of the generic space opening up. And therefore I would expect to see a lot more deals happening where either they will be taking over dossiers from the Indian companies, or perhaps even looking at trying to take over some of the Indian companies as well, and that may drive valuations for a while. On the FMCG space, I think for the most part, so long as food inflation remains up, I think the best part of the margin at least is behind us, and though volume continues to be reasonably good, I think you'll find that the next year earnings will be not that great as compared to the year that's just gone past. So if you begin to see some inflation cut off, then yes, margins can sustain. Otherwise, I would expect FMCG is something where you need to maintain your market position, but I wouldn't really go overweight on that.